Good morning, everybody, and time for another look at the SPX and look at the daily plan. Okay, see, I got this new toy up here. Let me remove it. Okay, so let's start with a quick peek at the chart, and then we'll kind of go back around to where we were, where we came from, where we are now. And overnight session, we're basically flat, 6,900-ish. A little pullback right to this zone I marked as a pivot and bounce in the overnight session. Nothing to get excited about. We topped out yesterday, right around 69.20-ish, and then kind of pulled back and tried to make it through that. We had some positive gamma strikes up here. They just kind of stalled us, and the same negative gamma ladder, and I'll talk about that in a minute, that dragged us up, dragged us back down. And once we started to get near 69.10, once below that, the gamma, the charm, everything implied that we make a move down to 6,900 or lower, and that's what happened. Overnight session, we're kind of back to neutral. And so let me pull up my Substack note. Oh yeah, I have a special for you guys today. Vol up, spot up. Yesterday we had a little VIX pop like it always does on a Monday. A little shift in the volatility thing, and I saw people coming out of the woodwork. Vol up, spot up. Oh my God, whatever, what does it mean? If it means something, whatever. So I guess we're going to do a little bit of that. I also saw somebody talking about the VIX 3-month VIX correlation. You guys divide the two numbers. By the way, academic research has VIX divided by VIX 3-month, not the other way around. For mathematical Cantango reasons, that's how it's always displayed. But anyway, we're going to get into that too. So let's see. So this is from the daily plan, and subscribers get this and more. See, like and subscribe. How you like that toy, huh? Nice. Okay, so we had bad breath or good breath at 70-30 advanced decliner. The trend and the tick were all positive. And so people are talking about whatever they're talking about. The fact is that we had a pretty big up volume day after 4 days of down volume. Gee, mean reversion, compression, the boat gets tipped toward one side too much, and we overreact to the other way, stretching the rubber band. It would be nice if the rubber band just kind of stood in the tighter range for a day or two. We had a 7-day range top to bottom on Friday. Yesterday, if we count from the bottom of Friday to the top, we had another huge range. So I think we're going to kind of settle in to a tighter range for a few days. I think we'll see. I know just because I think it doesn't mean it's true. Okay, so the vol up, spot up chatter, we're going to get to that in a minute. So geopolitical, in case you didn't hear about it, and there's this guy Maduro, who's from Venezuela, who got brought over here. A quick anecdotal, I saw them doing like the man on the street interview, and they asked about U.S. Maduro, and people were saying, Maduro, I'm not sure where that is. Is that a place? Where is it? And then somebody said, what's in Venezuela? Where is Venezuela? I don't know. Is it north or south of us? How can I know? Okay, and this is today's youth. Just saying, not counting bad hombre, but this is today's youth. This is today's youth. Okay, anyway, So we had the Consumer Electronics Show that is a bit to tech, and we saw tech kind of bounce and then pull back a little bit. Jensen Huang displayed his new chips that we're going to use to, to power $50 trillion worth of data centers tomorrow or whatever. And oh yeah, robotics. Robotics is the theme for 2026, in case you didn't know it, just like data centers were for 2025 and nuclear. There's some small players and some bigger players. I've got starter positions in them, and my subscribers will get my ideas for whatever they're worth. I think they're worth something. We'll see. At the end of the year, I can either take a victory lap or do the walk of shame. Anyway, okay, events and earnings. We have Barkin talking at 8 o'clock. Apparently nothing happened. We have services PMI. And we have just all kinds of data this week with non-farm payrolls coming in on Friday, which I think is kind of, unless it's something really out, I don't think that there's going to be much of a reaction. But, you never know. Okay, levels and lines. Let's get to the levels and lines. Then we have the daily plan, which we'll get to in a minute. The daily plan is the detailed roadmap. Okay, here we have levels and lines. Let's take a look at this. Okay, so right now we're right around 6,900. Large positive gamma sticky node. Let's not worry about exactly what that means. Let's just think like Chartist. It's a line that's kind of a support resistance line and sticky. So unlike a typical support resistance line, it also adds stickiness so that if we're moving up toward it, we fail at it like a typical resistance line. But if we move away too far, we get pulled back to it, unlike a typical resistance line, I think. And same thing above it. However, if we can get above, if then in the roadmap, if we can get above and stay over, and here's 69.10, then there's this negative gamma ladder. All that means is market makers hedge in this direction. So they're kind of buy up toward here, probably not getting toward here, but this is 25, 30, 35, this zone. We had the same ladder here yesterday, lower, and we climbed the ladder and stalled. Difference is today we don't have a hat on top of the ladder. Yesterday we had like one of these large bars on top of the ladder. Okay. Then we have the box 6680 to 6905-ish, which is kind of what I'm calling the chop zone. I think we're going to spend most of the day there unless we climb the ladder early. Unless we climb the ladder kind of early, and even then we kind of tend to fail and climb the ladder back down. If we should break below this 6880 level, here's the one main negative gamma market maker hedge in this direction, 6875 round number. So that kind of would be where, if we get into this zone, 6880-ish, overnight low was 68,990. Yesterday, we popped from 6860-ish on the Friday close and kind of ran right through this zone. So anyway, and then below us here in the 65 to 40 zone, we kind of have, positive gamma to cause like a little bouncy between 65, 75, and 85. And here, should that happen, expected move takes us to around 68.70, takes us around there. It takes us to around 68.30 on top. And below, there's really nothing there. As I said to myself in my note, don't torture the data. There's really nothing here to say much about. And really, this is pretty far away, so there's really nothing to say, don't torture the data up above us locally today. And that's what's going on here. Okay, so let's talk about vol up, spot up for a second. I know everybody's been waiting for this. Okay. Now let's talk about the VIX Decomposition Index. Was released August 2nd. And yeah, I even put the link in the chat there. You can go to the website. You can download the 20 whatever page PDF and read all about it. It's kind of interesting. So what it does is it breaks down the VIX into different components. And here's the main components. And what we saw in the VIX yesterday, sticky strike shift, the whole structure kind of shifted up a little bit. Downside convexity, no one was buying out of the money puts. That wasn't what was going on yesterday. Upside convexity, meaning call buying. Good morning, Ivan. I'm doing the VIX. You asked about the VIX yesterday. So we're doing the VIX today. So the VIX Decomposition Index. So yesterday, the sticky strike shifted, the surface shifted up a little bit. Parallel shift, everything shifted. The thing, downside convexity and nothing burger, nothing happened. Upside convexity, a little bit, 0.15. So it was a little bit of a call bid. So part of the spot up, vol up was here, some call buying. And that's what we had. That was basically what happened yesterday. Nothing particularly dramatic. You know, just typical weekend roll mechanics, and a little bit richer strip to the upside. Now remember, my brain kind of works on multiple layers at the same time. Remember, we have VIX futures and VIX are going to meet somewhere in the middle. VIX is 15, VIX futures are 16.4, VIX free next week. We're going to meet somewhere in the middle, probably close to 16. And so part of it is just that normal shift into expiry. Okay, so now as an added bonus, I saw some, whoops, where are we? I saw somebody talking about where was it? I didn't put it in my write-up, in which case we won't go into it. Oh yeah, okay, here's one other bonus. So I looked at the VIX 9-day expected move as maybe a better estimate, because as a volatility seller, I might be selling near there. So the 9-day expected move, today the expected move straddle based on the 9-day VIX is about 0.8%, which puts us 45.55. Now that's wide. And the Friday is about 95 points again, wide. Expected move bottom top puts us there. I did a little more extensive write-up in the Discord in Doc's commentary, but you can't see it, can you? Okay, so the VIX 3-month ratio, I guess divide the two, comes out to about 0.8. That's a steep contango. That's normal. That's historically healthy. The decomposition shows why that happened yesterday. So without beating a dead horse with that, I have a longer dead horse write-up somewhere, rabbit hole style. But that's basically that. Let's get back to the trading view. Okay, so that's what's going on here in VIX. But there is something that did catch my eye as I was thinking about that. I think a better measure is VIX minus VIX futures. And then the VIX 2-month minus futures. And that's a little high. See, historically, when we get here, that's a little high. Usually, we could, that doesn't mean that we have to, we can have You see here, we skirted this for a while, but that's a little high. So, could we get it? So now the gap fill boys now want us to go down to 68.60, basically, where we gapped from Friday. And so, do we get a fill of that gap, 68.60, 50, 20-day moving average? Yeah, we certainly wouldn't like, oh my God, what happened? That. So I'm kind of expecting that. I already have a gap fill fly that I put on last week. A couple of them are different expiry. They're 50, 40. They're different versions of like 15 wide, centering at 35. So those are fine for this. Also, I might put a few on, sporadically and see what happens. The other thing in the vol space, I know everybody is. However, the last however, because there's lots of howevers in the vol space, the VIX-VVIX ratio, the volatility to VIX, over 6.2 is kind of a little too high. We're right around 6, kind of normal-ish. When we get up around here, we tend to have this. When we get down here, that's way overreaction. We tend to get that. And so the volatility space isn't saying danger, danger, Will Robinson, but it's kind of in like an okay-ish spot, but. Good morning, honey in New York. Yesterday, and hard pin. Were you successful? Well, yes and no. So yesterday, at the end of the day, when we were, let me see if I can dig this up. Yesterday, at the end of the day, when we were like hanging out, well, really before the end of the day, when we were hanging around at 69.10, 69.12, I said, you know what? We got this target down here. We got the 68.85, whatever it is here to stop it. If we break 69.10, we should get a convex move down towards 6,900. Playing the end of the day charm plus the gamma pull down there. So I bought a 69.05, 68.95, trying to get the move through the 6,900, 69.85 to get the stall butterfly. Beautiful for a buck. That's the good news. The other good news for those people that took it was it priced out at around $5 near the close. The bad news, however, was I successful? Well, I sold it for like $1.25. So I made $25. I have paper hands. I saw it going down $15, up $20. So rational mind said, we're going down. Lizard brain says, you don't want to lose money. Take the money. And so I took the money. Now, guys like that, Ombre know how to hold on and wait for a trade to trade out. That's why I like to sell premium and even buy flies, because I know myself. Part of this game is knowing yourself and knowing how you trade. I see if I sell Iron Condor and I'm down $1,500 and I sold 15, 20 contracts on each side, just another day in the office. If I'm down $25 on a long trade, oh my God, what am I going to do? It's just funny reactions. So anyway, with that said, and we have the whole Mideast thing. I don't know if you guys have been reading the tweets and stuff, but we have U.S. assets gathering in. We have U.S. assets gathering in Iran, and we have not in Iran, like in the Persian Gulf there, and in Bahrain. Intelligence commanders, all that kind of stuff. We have protests on the street in Iran starting 9 days ago. Just coincidentally, when Bibi Netanyahu, the Israeli prime minister, visited the U.S. a few days before the Maduro thing, all a grand coincidence. Venezuela supplier of illicit oil to China buying oil with yuan, endangering the petrodollar. Iran, the other supplier, the Shah of Iran's kid coming out saying, "I'm ready to take, the throne and take over my rightful place in Iran. Should the people will it? So all this stuff is going on by coincidence, and anyway, so that's what's going on. The market doesn't seem to care, so neither do I. Until they do, then I do. Anyway, so that's my little geopolitical comment. With that said, I'm gonna get my stuff off and let Ben Hombre walk us through ES.
All right, guys, let me get that up the screen for you.
So many times. So here's the levels on ES, 45-ish, 50 is that same sticky strike where we are. And we have all these zones down here that he's going to tell us about.
Yeah, so if you want to keep sharing that, Doc, I'll walk you through my thinking.
On this chart? Wow.
Yeah,
okay.
if you want to.
Yeah, let's try that.
The first thing that I'm looking at is the pivot at a pivot I have at 69.43. That one's critical for me. If we start holding below there and break below 69.38, I think we see a pretty decent flush down to 69.20.
69, all the way to the bottom of the chop zone. That's the bottom of the, that I mentioned. Okay.
If we can hold 69.43, I think we have a pretty easy way up to 69.55, where I'll potentially be looking for a stall, kind of trading between those levels that you were talking about. If we kind of hold there for too long, I do think we start to sell off for today, tomorrow. That's more of my thinking. At around 69.50 to 69.60, I think that's a pretty good area where we'll find some sellers, and then come all the way down back to 69.40. So we'll be playing those two levels that you were talking about.
Gun to your head. Narrow range day, red day, green day.
Red day.
Red day. Okay.
Yeah.
And close near that 68.80-ish, 75.85. Close down in this area, give or take a few points.
So I'd say even a little bit lower, if I'm honest with you.
Huh?
A little bit lower.
A little bit lower. Oh my God. So you're taking us down to the gap fill?
Yeah, I mean, close to it. I think so, yeah.
Close to it. Maybe not fill it all the way. Now, are you allowed to take 2 days to fill a gap or 3 days, or is it a one shot? Otherwise, it doesn't count.
Well, I marked my gaps a little differently. I mark them where SPX closed, not the actual space of it.
Okay. So where SPX closed, so hold on. Let's switch gears again real quick. All right, so here's the non-continuous one. So here was our previous gap fill. I can leave it there for old time's sake. Here's the 20-day moving average-ish. It might have moved since I marked it. So you're going to mark your gap fill here.
Exactly.
Where it closed, 58.
Yeah.
Okay. Until we hit 58 or undercut down to 55, 50, whatever, until this area is tested and proven, it's still
a tap for me, a wick or something like that. Then I marked it filled. No.
Okay. Okay, great. Wow, and it's early. Very nice. Okay, let me switch gears again. I'm not sure what I even have on here. Oh, you too, Ivan. You too. Glad you stopped in. Always a pleasure. Okay, so here's just I don't even know when I put this on a couple of days ago. looks like whatever calls I had, I closed, and I guess have this put Frankenstein fly here. Okay, great. What I want to show you in the continuing saga, many of you know I speak about the icy whale, and although he was harpooned and skewered, there were some survivors that went out on a life raft from the premium fund mostly, and they were trading RUT. 3-day losses in a row. Yesterday they had about 4,000 or 5,000 contracts. I can't go back. I posted it on Twitter. At 60, at 25.50 or something, and they lost. Okay, so they're back again today. Only 1,500 contracts, not the 3,000 or 4,000 or the 5,000, 6,000 you would expect with the double. So it looks like we lost some people along the way, and the few survivors and faithful that are willing to storm the battlement after all those losses have stormed the battlement again. This time, last time they sold a 25 delta call. Today they're selling a 18 delta call, but they're selling a 28 delta put. And so I'm not sure how this is going to play out. I don't have a trade here. I just kind of marked it for fun. I'll just put it in at 4.99, so it won't fill. I can play with it later. Gun to my head. Yeah, I like hiding behind him. So I might do something like, nah, it's too chintzy. I would probably do something like that, 70, 75. I think I might actually put that in. On the bottom, we can get down to here. Maybe go up a little bit. Something like that looks reasonable to me. I'll put that in, see how that looks. I'll put that in and see what happens. I'll let you guys know. As far as iron conduits for today, I have some that I sold in the other account. If I was selling something now, we have that box. So here's how I think about it. Okay. So we have this 68.65 and we have this mess. Ideally, I'd like to be below 68.40, outside the expected move, outside the danger zone. And let me see if there's anything there. Really nothing there to speak of. Maybe I might put it in for 50 cents, see if I can get lucky. 50 round number, 45, what's here? That's not horrible. I think the downside, I think the flies are interesting for today. I think you can make money probably on both on flies on both sides, especially if you don't have paper hands like some people. Let's start with the put fly. And so we had that 80 as the bottom of area. So let's just kind of see what a 90, 80, 75 costs. 80 cents, that's not bad at all. You can even, if you're a little more bearish, that 75 target, you can do something like that for 65 cents. That seems cheap as shit, technical term. I'm gonna do that. And I might overlay it with something like a 90. If you want to kind of be a little, spend a couple bucks for $1.15, that's not bad either. You have two flies. This isn't bad. You know what? I'm gonna throw 200 bucks at this. Buy two different flies. That gives me a big sticky zone there. On the top side, We do have that ladder up. And it's kind of, if we get over 69.10 is when we can start to move. And we have yesterday's high kind of as a natural stalling area. I say, I don't like to spend that much money. So we'll go for something out of the money, 15.25, 35, $1.25. So I'm not crazy about the call fly from here. I wouldn't mind the call fly if we pulled back. So I'll give him 75 cents for it. Take it or leave it. And maybe one more fly right in that same center. I forgot where that center was. Right in that same center around 20. A little cheapy placeholder. I don't mind spending $40 for a little cheapy placeholder right in the middle. $30 even better. And on top, a 40-ish. Challenging the all-time high at 45. Do we close a new all-time high today? Probably not, but we could. I don't know. The data doesn't support it. And that's kind of what I'm looking at today. Okay, any questions? Has Cal shut down? Well, he hasn't shut down. He's not personally giving any recommendations. His bot is still working. So whenever survivors are there, if they want to take the trades, they do. There really hasn't been any signal that his bot would trigger. There hasn't been 2 days in a row where realized volatility outpaced implied volatility on the SPX. Apparently, we've had that in RUT, and RUT is for his premium subscribers who pay more for the privilege. And that's what's triggered. And he's regrouping. He's reached out to some software people that I know of who mentioned it to me. And he's trying to figure out how to right the ship. I hope he does. I hope he figures, more important, I hope he figures out a way to make some of these people whole. That's what I really hope he figures out. And that's the cow story in a nutshell. Okay, any closing comments? Yes, no?
No, not from me. We are starting to see a little bit of selling here. We'll see if we can maintain that.
See, look at that Q&A. Look how clever. Any questions? You're welcome. You're welcome, Wolf. I call you Wolf. Did you see Pulp Fiction? Remember the wolf? I talk fast, I think fast. When he shows him how to clean up the body. Great scene. I love that scene. I love Harvey Keitel. Anyway, so when I see your name, I think of Harvey Keitel. Okay. Take care, everybody. All right.